Imagine waking up one morning to discover that your country just lost $22 billion overnight. That's exactly what happened in March 2025 when China unexpectedly cancelled 1.8 million tons of soybean orders from the United States. This wasn't just a bump in the road. It sent shockwaves through US trade and raised a very important question. Was this just a business decision or something far more strategic? China, which handles around 30% of global trade, rarely makes a move this large without purpose. And this cancellation feels less like a glitch and more like a warning shot. With so many moving parts in today's economy, this single action sparked a domino effect that went far beyond soybeans. Let's bring it closer to home, Missouri to be exact. For farmers there, this cancellation wasn't a line in the news, it was a punch to the gut. These farmers had invested heavily in soybean exports to China and they ended up losing $1.1 billion in the blink of an eye. It's not just about the crops, this impacted entire communities, processing plants, transportation, local businesses. In Missouri alone, 42,000 acres were involved in this trade, and when those acres suddenly became worthless in the export market, the local economy started to unravel. That's what makes this more than a trade story, it's a people story. If you're finding this topic eye-opening, don't forget to hit that like button and share this video with others who care about the global economy and its real-world impact. Here is where it gets more interesting and slightly alarming. This isn't just about cancelled crops, it's about control. China already had a major stake in US agriculture through WH Group, which owns Smithfield Foods and controls another 42,000 acres of American farmland. So when China pulled the plug on soybeans, some saw it as a calculated move, not just to hurt trade, but to demonstrate influence over America's agricultural core. It's a bolder strategy. Gain ownership, then use that leverage when it suits your national interests. And it's making countries think twice about who they are really partnering with. With the US taking a hit, Brazil stepped in to fill the gap, and not quietly. Brazil has become a major supplier of agricultural products to China, especially soybeans and grains, pushing the US further out of the picture. This shift isn't temporary. It's part of a bigger trend. Countries around the world are diversifying where they buy and sell, trying to avoid relying too heavily on one partner. And for the US, that could mean a permanent loss of dominance in a trade market it once led. Let's talk about what this means for you and your wallet. The US Department of Agriculture is forecasting a 6.4% rise in food prices for 2025. For an average family, that's about $47 more every month on groceries. And when you pair that with ongoing inflation, it becomes clear. These global trade moves have very personal consequences. While everyone was watching soybeans, China was making another quiet but powerful move. Over the past 17 months, it has reduced its holdings of US Treasury bonds from $1.06 trillion to $816.3 billion. That's a serious shift. Instead of pouring money into US debt, China's been buying gold over 300 tons since 2022. Why? Because this strategy helps China reduce its reliance on the US dollar and protect itself from future economic tensions. It's a financial pivot that could reshape the balance of power in the global economy. Let's rewind a bit to where much of this tension began. During President Donald Trump's administration, his tariff strategy was, unique. He took the US trade deficit with a country, divided it by the total imports from that country, and used the resulting percentage as the tariff rate. Simple? Sure, but economic experts weren't impressed. They argued it oversimplified complex relationships. For example, using this formula led to a proposed 67.3% tariff on China without factoring in the actual tariff structures or China's response. That kind of blunt instrument can backfire, and it did. Those tariffs led to more than just higher prices, they caused real damage. Manufacturers were hit hard, jobs were lost, prices went up. Supply chains cracked under the pressure, and farmers again were caught in the crossfire. It created a ripple effect that touched almost every corner of the economy, from retail to agriculture to small town communities. April 2, 2025 was dubbed Liberation Day by President Trump, but Canada didn't see it that way. Ontario Premier Doug Ford called it Termination Day, slamming the tariffs as a tax on Americans that would eventually backfire. Canada's response was fierce and clear. Prime Minister Mark Carney publicly declared an end to political trade games with the US. Canada now wants to build new alliances and cut down its economic dependence on American trade altogether. This isn't just frustration, it's a strategic pivot. And it's not just Canada. Europe is gearing up for a trade showdown of its own.
President Trump's announcement of universal tariffs on the whole world, including the European Union, is a major blow to the world economy. I deeply regret this choice. Let's be clear-eyed about the immense consequences. The global economy will massively suffer. Uncertainty will spiral and trigger the rise of further protectionism. The consequences will be dire for millions of people around the globe, also for the most vulnerable countries, which are now subject to some of the highest US tariffs. The opposite of what we wanted to achieve.
With Trump threatening 25% tariffs on European steel, cars, and parts, leaders like Ursula von der Leyen have said they are ready to respond with full force. This could trigger a tit-for-tat scenario where countries keep raising barriers, leading to a chaotic and unstable global trade environment. It's not just about economics, it's about pride, power, and control on the global stage. By the way, we want to hear what you think. Are these global trade shifts a necessary correction or a dangerous escalation? Drop your thoughts in the comments. Your insight really adds to the conversation. No company symbolizes American innovation quite like Tesla, but lately even Tesla hasn't been immune to trade turbulence. The company has lost nearly $800 billion in market value, and part of that decline is directly tied to worsening US-China trade relations. China responded to US tariffs with some of its own, raising import taxes on Tesla's high-end vehicles by up to 25%. That move gave Chinese automakers like BYD and NIO a huge advantage at home and left Tesla scrambling. It doesn't stop there. Tesla is also losing ground in the US and Europe. Some of that is due to increased competition, but a portion comes from internal issues, particularly Elon Musk's public statements. His political positions have rubbed some customers the wrong way, and that's showing up in the numbers. Looking at the bigger picture, Trump's aggressive trade approach left the global economy in a mess. Experts now refer to it as the Trump slump, a period of erratic policy, disrupted markets, and fractured alliances. And the instability is still being felt. Disorganized strategies like these can seriously damage global supply chains, shake investor confidence, and push customers into harder financial situations. The US now faces the tough task of rebuilding its relationships and reestablishing trust in global trade system. So what comes next? The United States is at a crossroads. It can't afford to isolate itself, but it also can't allow other countries to dictate the terms. The future will depend on how wisely it manages its partnerships, both old and new, and how it handles economic pressure without overreacting. The path forward must be strategic, deliberate, and collaborative. Anything less risks deepening the very problems the country is trying to solve. If you made it this far, thanks for sticking with us. Don't forget to like, subscribe, and ring the notification bell so you never miss out on the latest global updates. Your support helps us keep diving deep into the stories that matter most. See you in the next one.